Hello and welcome to the Bougie Banker. It's now been a week and a half since the collapse of Silicon Valley Bank. And today and tomorrow we have a meeting of the Fed Open Markets Committee, which is the decision-making body of the Federal Reserve. And they're going to decide whether or not they should continue to raise interest rates in an effort to suppress inflation. Of course, now that we've started seeing cracks emerge in the system with bank collapses, there is some speculation that they'll tap the foot on the brakes. But thus far, futures markets have priced in about a 90% probability that they are going to raise rates another quarter point tomorrow afternoon. So it'll be interesting to see what happens if they do so. We did see a bit of a rally in bank stocks today. You saw the bank sector was about 2% up day over day, which is showing some improvement and some strength. But the Fed could end it all if they decide to be more aggressive with rates. So what should you do as an investor at a time like this when we have what is effectively a binary outcome in the market as a result of whatever the Fed is going to do tomorrow? So if they raise rates a quarter point, I mentioned a 90% probability that that's already priced in. That means it should have a very small impact on markets. Bank stocks, if the banking sector does continue to improve from here, is going to recover. If you wanted to take advantage of the recovery in bank stocks, sure, you could pick some individual banks that you could invest in, or you could purchase a bank sector ETF, such as KBE. And I'm not playing favorites, but that's one of the big ones in terms of bank ETFs out there. What is an ETF? It's an exchange-traded fund that tracks an index. In this case, it's an index of bank stocks. So you can get a broad exposure to the sector while trying to minimize exposure to individual banks along the way. So I personally, if the Fed goes only a quarter point tomorrow, that's how I will voice my confidence in the banking sector. Of course, they also have the option of not raising rates tomorrow, in which case we're going to see probably a large-scale rally across all equities, including bank stocks. If they decide to be more aggressive and raise rates by 50 basis points, that would be a very concerning sign to many investors that the Fed is going to overdo it in these interest rate increases. And it could be time to remain on the sidelines if that's where you already are, or get on the sidelines if you're not there yet. So thank you for joining. This has been the Bougie Banker.